What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an analysis on Polygon.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And on today's video guys, first of all I will show you where we are on a price chart and how we get there. Then we'll continue with some updates on a bigger scale of this asset, and I have to admit that its structure is not the best one in terms of the Elliott wave theory. And at the end of this video, I will show you my forecast and the microscopic analysis of this tiny wave that is not so tiny, I would say. It gained for the last several weeks about 159% to its value. So, and before we dive deep into all of this, guys, please hit the like button for YouTube algorithm, and if you want to know more about technical analysis, please join my Patreon account, where for the $35 a month you will be able to drastically enhance your trading skills. On top of that, for the first 100 subscribers I will do a giveaway. I will do a technical analysis based on your request on any asset that you might find. On top of that, guys, and it is the most lucrative offer, for now there is not so many people inside the Discord group. That is why almost 100% of my time will be dedicated to you, and it is pretty much one-on-one training for the value of $450 a month, but for the fraction of this cost, for just $35 a month. And I think it is quite fair deal. So guys, and let's take a look again at its price section. First of all, as you can see, its structure was extremely impulsive back in 2021, and I have to admit that back in the days I made a lot of analysis, a lot of videos on this asset, but I have to say that this structure is not so good. It is, in my opinion, double Elliott wave correcting pattern, and if I turn on the logarithmic scale, you can see that, wait a second, let's switch to weekly time frame. You can see that potentially from this bottom we have on the biggest scale, this is the first wave, second, third, fourth, and we have at least one more leg to the upside to complete its entire structure for the biggest scale. And guys, this is just an assumption of its major movement to the upside that potentially might lead much higher targets. But I will focus on this tiny wave, and I will do it within just several minutes. First of all, let's take a look at the fundamentals. The market is up by 1.28% for the last day, and the total market cap reached $3.65 trillion. I have to say that in this list, Polygon for now is on 30th place, and back in the days I remember the times when it was at top 10 coins, and definitely from the fundamental standpoint this asset lost some of their positions, but nevertheless it has quite decent potential. It still has a quite decent potential of its movement. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, let's focus on this tiny wave, and first of all let me turn off the logarithmic scale, and let's define some ranges of okay, if I connect these two tops and basically these three tops, you can see that we can clearly use this range, this line, as the level of resistance for its upcoming price action. Can you apply it as a parallel channel? Probably yes, with some exceptions, but technically, yes, we can use this as a parallel channel. This means we can have clear ranges of support and resistances. But guys, this is an extremely deep level, and I don't think that from this point, from the current price, we might go this deep. Let's switch to, let's say, 30 minutes time frame, and let's focus on the most recent movement, or let's say, let's switch to 3 hours time frame. Yes, this from this bottom to this top. Well, it is quite interesting. Let's put it this way. Basically, let's delete it. I don't need it so far. Let's count the waves inside this movement. Potentially, we might have, this is our first wave, second, third, fourth, and fifth. Let me downgrade the scale. And if it is the real breakdown, definitely we can assume that this retracement should land at certain levels. If I pull the Fibonacci retracement tool from the bottom of the wave to the top of the wave, as you can see, it reached exactly 0.5 fib level. This means basically it was a perfect accumulation point. On top of that, it was the coincidence, let's say confluence, with this bottom in the retracement of the right after the top of the third wave. It is well, 1, 2, 3, 4, 5. Yes, it is the bottom of the A wave in the retracement to the fourth one. And I have to say that from this range, from December the 4th, right after it retested the 52 cents mark as double bottom pattern, it gained about 26%. So guys, from this bottom, technically we have again, well, this point is lower than this one, and potentially it is just 3-wave structure, or it might be 5-wave structure, and nevertheless we have pretty much the same level of its lowest point of its low, and we have the highest level. So let's do some measurements again. From the bottom to the top we hit only, and we are retesting for multiple for several days 0.382 at 61.69 cents. And well, again, it is quite interesting pattern, because we might have on a smaller scale again 1, 2 with an attempt to hit higher targets if the next wave is the motive wave, and it will be the third wave on a smaller scale, and this means we might see a huge movement to the upside. So let's do some measurements, and let's project where we might land if it is the 1, 2 on a smaller scale. Let's mark it like this: 1, 2, 3, 4, 5 to be determined, and we have to downgrade the scale. It is a minuet, and let's make it a bit bigger. Let me show you like this. So how we can project the target? First of all, if it is the bottom, we can project and if it is the first wave to the upside, we can project the top of the third wave on a bigger scale. First of all, we have to pull the fib extension tool from the bottom of the first wave to the top of the first wave and to the bottom of the retracement. And if this pivot holds, we have the third wave, the price target for the third wave at $1.31 mark, which implies quite substantial, let's say 115% of upside potential from current level. But it is on a bigger scale, and we have to identify its movements on a smaller scale. And let's do some measurements again. Let's mark it as the potential price target for the top of the third wave, and let's identify it, top of third wave. Okay, and we don't need this tool, and we can project the internal third wave. If I pull the fib extension tool from the bottom to the top and to the bottom of the retracement, the third wave on a smaller scale will be at $0.58 mark. This means we might have this as our point of control. Then we have to have a retracement, and then we have to land somewhere higher, potentially at $1 mark as the range, as the next range of according to Elliott wave theory. But guys, I have to admit that it is very difficult to assume the next top of the wave before we identified these two tops. That is why, guys, let's focus on the most on the closest price action, and if this bottom holds without any substantial movements to the downside, and let me show you the invalidation point for this account, at least in the short-term perspective. If this asset breaks 57 cents price point, we will not hit much higher targets, and most likely we will see the corrective pattern potentially that might land a bit lower, and that will give us a chance to re-evaluate the entire structure. That is why, guys, you can accumulate your position incrementally to the downside with the stop loss slightly below 57 cents price point, and with anticipation to hit 85 cents first price target, and this will give you an upside potential depending on your entry price and depending on your average price of about 45%, and the downside potential about 4% if you put your stop loss slightly below 57 cents. This means risk to reward ratio of let's say 10 to 1. Let me make this crystal clear for you. This should be the price target, and this should be the stop loss. Wait a second, let me mark it like this, below the $57 mark. And guys, as you can see, for now we have a risk to reward ratio of 6.18 to 1. But if you incrementally, if this asset goes to the downside, if you incrementally will dollar cost average to your long position, you will have up to 10 to 1 risk to reward ratio with 43% of upside potential and about 4% of downside potential. And this is quite a short-term trade that will happen before the year end, and I think within next week or week and a half we might hit it, or we might break this pattern to the downside, and in this case we will book some losses. So I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, doing no cap. Only God wants you.